Tesla is in trouble. The company, once a symbol of innovation and the future of electric vehicles, is now facing a major sales slump, and it's not just because of increasing competition. Two key factors are hitting Tesla hard. First, the economic fallout from Trump's newly imposed tariffs, and second, a growing backlash against Elon Musk's political endorsements, which have alienated key consumer groups. So, what exactly is happening? Why are Tesla's sales taking a nosedive? And what does this mean for the company, Elon Musk, and the broader US economy? Let's break it down. Trade wars are back in full swing. President Trump's recent tariffs, aimed at protecting US manufacturing, have triggered immediate retaliatory measures from major trade partners like China and the European Union. For Tesla, this is a nightmare scenario. While the company is based in the US, a significant portion of its sales comes from international markets, especially China and Europe. Now, thanks to these retaliatory tariffs, Tesla is facing major obstacles. Higher production costs. Tesla relies on imported materials, including aluminum and batteries from China. These tariffs make production more expensive, cutting into Tesla's already thin profit margins. More expensive exports. Retaliatory tariffs mean Tesla vehicles sold in Europe and China are now significantly more expensive for consumers, reducing demand. Declining Chinese sales. Recent reports show that Tesla's sales in China have dropped sharply, by as much as 30%, as consumers turn to cheaper, locally made alternatives. To put it bluntly, trade wars rarely have a single winner. And right now, Tesla is one of the biggest casualties. Tariffs aren't the only thing driving Tesla's decline. There's another factor at play, one that is deeply personal to the company's CEO, Elon Musk. Musk has always been outspoken, but over the past year, he has taken an increasingly political stance, aligning himself with Trump and far-right political movements in both the US and Europe. While some business leaders can navigate political affiliations without major consequences, Musk's approach has been different. Endorsing far-right candidates, Musk has publicly backed Trump, as well as controversial far-right politicians in Germany and other European countries. This has led to protests against Tesla in major European cities. Alienating core customers, Tesla built its brand on innovation, environmental consciousness, and progressivism. But many of those early adopters, particularly in left-leaning states like California, are now boycotting the brand due to Musk's political rhetoric. Brand damage. Recent surveys show that 94% of German respondents say they wouldn't consider buying a Tesla, largely because of Musk's political associations. Similar trends are emerging in Canada and parts of the US. Public sentiment matters in the auto industry. Unlike tech companies where consumers may be locked into a platform, car buyers have plenty of alternatives. And right now, many are choosing competitors like Rivian, Lucid, or even legacy automakers that are expanding their EV lineups. The impact of these twin crises, tariffs and brand damage, is being felt in Tesla's stock price. Tesla shares have dropped 5.5% in just a few weeks, reflecting investor fears over declining sales. Analysts are warning that Tesla's growth story is at risk as the company struggles to maintain demand in key international markets. Some investors are even calling for Musk to step down as CEO, arguing that his political distractions are hurting the company's bottom line. Tesla has survived stock fluctuations before, but this time, the challenges are coming from multiple directions at once. And unless the company takes decisive action, the long-term outlook could get worse. Tesla isn't just any company, it's a major player in the American auto industry and a symbol of US technological leadership. Its struggles could have broader implications, including job risks. If sales continue to decline, Tesla may be forced to cut jobs or reduce production, affecting thousands of workers. Investment uncertainty. The EV market is growing, but Tesla's struggles could make investors more cautious about backing US-based automakers. Global competitiveness. If tariffs make US products more expensive overseas, other American manufacturers could face similar challenges, leading to an overall slowdown in exports. The bottom line: when a company like Tesla struggles, the ripple effects are felt far beyond the stock market. So, where does Tesla go from here? Fixing the brand. If Tesla wants to win back lost customers, Musk may need to tone down his political rhetoric and refocus on what made the company great: cutting-edge innovation and sustainability. Navigating trade challenges, Tesla will need to find ways to mitigate the impact of tariffs, whether through new supply chain strategies or negotiations with policymakers. Staying ahead of competition with companies like BYD in China and Volkswagen in Europe ramping up EV production, Tesla can't afford to lose momentum. For now, Tesla is at a crossroads. Will it adapt and recover, or will these challenges push the company into a deeper decline? Only time will tell. What do you think? Is Tesla's current crisis just a temporary setback, or is this the beginning of a long-term decline? Let us know your thoughts in the comments.